Hello. Hi, I hope everybody's doing good. So today I was taking a walk and kind of thinking about, my trading, and something came into my mind, and I just wanted to share some of the things I was thinking about. And so what I was kind of thinking about, as I was walking is what actually is trading, right? As you get into the business of trying to learn how to trade, you have an idea of what trading is, but as you get further along in your journey, you start to realize that it's not necessarily what you thought it was, right? So, what exactly is trading? Is it similar to gambling? And also, why is it important for you to have a good understanding of what trading is? Because that's going to have a major impact in your psychology, and you're also going to have a major impact in how long it takes you to become a successful trader, and what your path to that point is going to look like, right? So the first thing is, why does that matter? Why do you need to look at trading in a certain way, right? So it matters because trading, depending on how you approach it, can have tremendous impact on your psychology, right? It's not just a money thing, it's also a psychology thing. Okay. So what's the difference between trading and gambling? Well, if you really think about it, if you're using an instrument, for example, in here, the US 100, we can get into what that is a little bit later, but if you're using the US 100 to trade and to gamble, that basically looks exactly the same. You take a trade here, and then you sell at a certain point, or you take a trade and you buy at a certain point, right? So the only difference between gambling and actual trading is statistical analysis, right? Because if you don't have any statistical analysis, you're just hoping for things to happen, right? Whenever you're trading, you need to have statistical data to back up whatever strategy that you're using. If you don't have that, then you're gambling, right? I mean, I don't want to say that there's people that have intuition and all of this type of thing, but for most people, I would say that, statistic is the best way to go, because you have something to trade off of, right? So the main difference between, like I just said, trading and gambling is statistics. If you have proper statistics, then you actually are pushing trading the right way, right? So why do you need to have statistics? Well, I know a good example that I like to take to kind of prove the point is that, let me get up here and say, okay, so typically what people think is that, well, if you're taking a trade, let's say you're taking a buy trade, because there's only two options, right? Either you're winning or you're losing, right? That you right on the trade or you wrong on the trade, right? And sometimes people associate that with direction, right? So I'm taking a trade here. If the trade goes down, I'm losing. If the trade goes up, I'm winning, right? That's a 50-50 chance, right? Well, that is not how it works, right? Because the direction of the trade is only one of the parameters that you have when you're taking a trade. There's actually much more parameters there, right? So whenever you're taking a trade, right, you're making a bet. Let's say I'm taking a buy trade. When you're taking a buy trade, you're making a bet that the market is going to go up. Up is a direction. So let's call it direction, right? So that's one of the parameters of your bet. I'm buying, I'm hoping that the market is going to go up. Okay. The second part of your bet, right? You betting that the market is going to reach a certain price value, right? So if I'm betting that the market is going to get to $100, or I'm betting that the market is going to get to $150, well, the probability of those two bets might be different, right? Because it depends on what the market typically does, or whatever the parameters that you're looking at. But the target of your bet is also important, right? It's like betting that the Lakers are going to score 150 points in a game, or betting that the Lakers are going to score in 90 points in a game. 90 points is way more likely than 150. So that's an important parameter, right? Another parameter in your trade or bet, right, is the path that the price is going to take to get to your target, right? So let's say in this instance, I'm buying here, right? I don't know if you're not familiar with candlestick. You can watch one of my videos, but candlesticks, for example, typically people would buy, let's say at the high of this candle here, right? Let's say you're buying here and you're putting the stop loss just below the candle, right? Now, for that trade to be a successful trade, if your target is around that price zone, the price would have to hit that target before hitting your stop, right? If your stop loss is right below here. But if you take a look, you can see that the price actually hit that stop before hitting your target, right? So the path that the price takes before getting to your target also is important whenever you're measuring your statistics, right? So the path that the price takes is also a parameter in your bet, right? Because as we said, gambling and trading is really the same thing. The only difference is the statistical data, right? So your path is important. The other factor that I think people kind of neglect is time, right? So when you're taking a trade, you have an expectation on how long the price will take to reach your target, right? Well, depending on what that expectation is, that can affect how you handle the trade, right? If you're taking a trade, a day trade, right, that's supposed to reach a target in 30 minutes and it's taking 2 days to reach that target, right? Then you're readjusting, and there may be decisions that you have to make because of how much leverage you have or things of that nature. So time also affects your trade. And obviously, if you're trading instruments like options and things of that nature, that's even more important, right? So direction, target, path, and time. I mean, there's probably other parameters that you can have, but for me personally, this is the parameters that I'm typically looking at, right? So let's say you're taking a buy trade, right? What's the probability of you having the right direction on the trade, right? Well, you might say it's 50-50, right? Either you have the right direction or you don't, right? It could be more complicated than that, but let's just say for the sake of our discussion, it's 50-50%. You have 50-50 chance of having the right direction, right? Now let's talk about targets, right? Because you can get the right direction, but the price doesn't get to your target and come back down to your stop before hitting your target, right? So how likely are you to pick the right target for the price, right? Let's just say you have a 30% likelihood of picking the right target, right? Now you can clearly see now that because you're adding multiple layers to your bet, right? The probability of what appeared to be an initially 50-50 bet is coming down, right? The path that the trade has to take, right? Depending on what your stop is or whatever elements that you're using to determine that your trade has failed, the price has to move in your direction to your target before, right, the price behaves in a way or hit your stops so that you feel like the trade has failed, right? So let's just say you have a 40% chance of predicting that properly, right? Time, typically time is really not an issue, because if you're trading with the proper time frame, typically if you're not trading option, you have the ability to pick your time frame wisely and have an idea of how long it will take for your trade to reach your target, unless you're doing extremely long-term trading, like on a daily basis or on a monthly basis or something like that. So as you can see, what appeared to be a 50-50 strategy, right? Just looking from an outside looking in, is really not a 50% strategy, right? Because there's these other parameters that bring down your probability of success, right? So that's why you need to approach trading like a statistical game, because that's really what it is, right? You want to make sure that you have proper numbers for your strategy based on all the parameters that's in your strategy, right? If you're using a stop, if you're using a target, if you have a certain time frame for your trade, if you need to include all that whenever you're testing your strategy, and you're getting your baseline data to make sure that whatever data that you obtain is actually reflecting what your strategy is, right? So, and that's very, very important to have this data, right? Because that would affect your what you should expect from your trading over a certain period of time, right? Now, that doesn't mean that that's what you're going to get, but there should be an expectancy when it comes to your trading. You should know, or at least have an idea, of where one can I expect to have losing streak, right? What type of losing streak am I going to get based on my statistics and my strategy? What type of return can I get over what time frame, right? And this is kind of what will also help you with the psychological aspects of trading, because when you don't have expectancy and you don't have a way to gauge what's happening compared to what's supposed to happen, then that's a problem, right? If you have a 50-50 win rate strategy and you have if you have 3 losing trades in a row, I mean, it's actually not that unlikely to happen, right? That could actually happen, right? So it shouldn't be the end of the world for you, right? But if you have a 95% win rate strategy, right, and you have 5 losing trades in a row, that's a problem, because then whatever data that you have is getting it's not as you can't rely on it as much, because now it's not reflective of what you're actually seeing in your trading. So this is why you need to have this information, so that you can adjust your trading, in different kind of ways, and emotionally too. You can adjust your emotion as you're going. You can say, hey, my strategy says that I can actually have 3 losing trades in a row over 10 trades, so it's not something I should be alarmed about, right? I should just continue to do the same strategy. So if you want to be a good trader, you need to understand the difference between trading and gambling, and you need to understand the importance of statistical analysis and why you need to have statistics to back up your trading. So I was just thinking about that, and that's a step that I've taken over the past year or so. I really wanted to get more into backtesting and data analysis and getting statistics on my trade and strategies, because that gives you a comfort when it comes to your approach to trading, your approach on improving your trading, and also psychologically it gives you a kind of a peace of mind to know that, okay, this is not some crazy things happening. It's just normal based on my statistics. So thank you for watching, and if you have any comments or things that you wanted to discuss, just post some comment on there, and then that'd be a good thing for everybody to kind of discuss, because that's really what trading is about.